$344 million gone. But is it the end of the Bitcoin bull run? Should you be selling in May and just walking away? Or is this bull market yet over? And actually, there's a lot more room to the upside. In today's video, we'll be breaking down the Bitcoin news today, taking a look at what's been going on, what has spooked the market, and sharing my Bitcoin price prediction for 2024. Guys, let's get into it. So we're going to start right here. The US Bitcoin spot ETFs have seen its first monthly outflows in the range of $344 million. It's not a small amount, and it has definitely shocked the space quite a bit. Now, obviously, we've been talking about Bitcoin spot ETFs for quite some time. We've seen some great inflows. We've seen the Bitcoin price moving up quite aggressively over the last kind of few months or so, but it did stall out. We saw Bitcoin spot ETFs kind of come down with not really all that much activity in them. And of course, now we've seen those sellers kind of coming in, liquidating their Bitcoin spot ETF shares, and we start to see the outflows. We start to see more Bitcoin hitting the market. Now, sure, some of it has been soaked up by other entities, other large investors, whales, and so forth. But for the most part, we are still seeing more supply than demand. And it isn't a shock. It's not a surprise, because we've been saying there's been a lack of demand for Bitcoin from a spot point of view for quite some time. All you have to do really is take a look at the Bitcoin USDT paired charts on, let's say, Binance, for example, to see a diminishing amount of volume over time. This shows us that we really haven't been in that bullish market from a traditional crypto perspective. The Bitcoin spot ETFs have definitely been fueling a move to the upside, and the question now becomes, is the dream over? Are we now going to see more outflows from these Bitcoin spot ETFs, more profits being taken, and Bitcoin slipping down even deeper? You can let me know what your thoughts are on that in the comments down below. Next up, we have an analyst predicting a 50% crash for Bitcoin. Essentially, you should probably be selling up because the bull run is over. Now, whether this is accurate or not is obviously pure speculation, and I'm going to give my thoughts and opinions in the charts in a moment. But in this particular article here, we are of course referencing an analyst who was right about the 2018 crash. Now, I do want to kind of emphasize a little bit here that we haven't really seen a bullish market in the way that we would normally expect to see one. You know, we have just had the Bitcoin halving, and traditionally speaking, we often see a lot of profits being taken just after the halving event occurs. And what happens, about 12 to 18 weeks after the Bitcoin halving, we actually see a parabolic run to the upside. That means that we are just on track for accumulation, potentially one of the last accumulative phases before we get into that next leg to the upside. So although this guy has been right in the past, doesn't necessarily mean he'll be right again. Now, Bitcoin's price action has been a lot more aggressive to the upside than many of the other altcoin markets. And we can of course see that many altcoins have yet to reach previous all-time highs or do anything of note, indicating that there hasn't really been an appetite for many altcoins to really continue to surge to the upside. And if this bull market is over, it will go down as one of the worst bullish markets in crypto history. So ask yourself this: is the bull market really over, or is there a lot more room to the upside to go? As I said earlier, this is the worst month since the FTX crash, something that we did predict here on the Cheeky Crypto YouTube channel. More details can be found in our free Discord. Link for that is in the description below. Now, for the most part, it's definitely been a pretty interesting ride so far, and I think Bitcoin's actually holding up incredibly well so far, considering where I think the price action could be going on the short to medium term. So although this might be the worst month in a while for Bitcoin, it was kind of already expected. If you've been following the channel for a while, and maybe even just over the last 1 to 2 weeks, you'll know that I've been predicting us to move down towards our 200-day exponential moving average. And well, this move has still got a little bit further to the downside to go before we get anywhere near that 200 EMA. So yes, it might be the worst one for a little while here for Bitcoin, but I still think it can get a lot worse on the short to medium term. I do think, though, that actually this is a good sign of things to come. There isn't that much more selling pressure, in my opinion, before that supply gets soaked up by other retail investors, institutional investors, and maybe even the spot ETFs starting to come back in. So let me know what your thoughts are in the comments below as to whether you think the bull market is over and whether this crash that we have seen most recently for Bitcoin is the end of the bullish run. Some people are calling this the perfect storm as it lost $60,000 support levels. And, you know, the rest of the crypto market should probably be bracing itself for impact. Again, I've been talking about potential moves to the downside, these potential altcoin crashes for quite some time, although I still believe we have a long way to the upside to go for those altcoins. So you can let me know what your thoughts are in the comments, but I do think that actually things here at the moment for the crypto market, Bitcoin and the altcoins, is actually kind of going along as expected. There isn't anything unusual, any kind of major shock to the system. And of course, you know, the Fed in their potential interest rate hikes or even reduction of interest rates, depending on how they really want to take this thing, will shock the market in a negative way. However, one of the key reasons and the rationale as to why we've seen Bitcoin react so negatively recently is because the Fed are considering interest rates and whether or not they're going to pause, hike, or lower and reduce their interest rates in the next coming days. Now, if they pause, and I've been through this before, if they do pause their rates, then I do think we're going to see more green coming back into the market and we'll see a bit of a bounce for Bitcoin and for the altcoins. A static interest rate is seen bullishly here in the crypto market, where if we see a price or a interest rate hike or reduction, it will be seen negatively and we'll see money coming out of the space. We've been through the charts, we've seen this, and maybe I'll do it again in a coming video to show you and kind of give you my thoughts and ideas as to what I think is likely to happen. So do watch this space as I will dive back into that data and show you what I think the most likely outcome is going to be. So let's jump into the charts. Let's take a look at Bitcoin's price action here on the daily time frame. Now here we can see that we have obviously pulled back down into our low range that we had marked out previously. We had tapped into this range over here on the 17th of April and on the 18th of April, this range being $57,000 to $60,000. And of course, yesterday we tapped back into here, hitting a new local low. So we were previously talking about a run up towards $70,000, 69 to 72. And unfortunately, with the move that we saw yesterday, the rejection from our blue line, which is our 50 exponential moving average, is an indication that we are not likely to see this bounce up towards this range anytime soon. And instead, we are more likely to see the $53,000 to $56,000 range here on the lower side. Now, as I was talking about earlier in today's video, we are looking for the price action to move back down towards its 200-day exponential moving average. That is the white line that is coming through the chart here. It happens to coincide in the next kind of couple of weeks or so with our targeted range of $53,000 to $56,000. That means that this is the area that I think we're likely to see the reversal to the upside. Now, interest rates over in the US may be a catalyst for a bit of a bounce. We might find another bounce here before we eventually do slip back down this downside. Okay, if interest rates do hike, or on that kind of 1 in a million chances that they decide to lower their interest rates, I still see us with a move to the downside. We should remain bullish on Bitcoin and on the crypto market as long as we remain above their 200-day moving average, okay? The 200-day exponential moving average, the EMA, is your trend filter, okay? So there's lots of noise in the market at the moment, lots of negativity in the news. Lots of the mainstream media do want you to be selling your bags. You've seen the spiel, you've seen it from certain influencers, you've seen the saying coming up. It's even in the comment sections of today's video. Sell in May and walk away. And it's the dumbest thing I've heard in a very long time. Let me show you why. Okay, we don't sell now, we're down 19%. It's like saying we're going to buy high and sell low. It's a very stupid thing to say in my opinion. But of course, there are a lot of mainstream media out there, lots of influencers that are kind of spilling the same talk, and at the moment it doesn't make a lot of sense, and I've been through this before a couple of times. One of the main reasons is the overlapping nature of our candlesticks here. This overlapping nature tells us that this is a short-term corrective pattern. It isn't a long-term trend to the downside. If it were a long-term trend to the downside, I would totally agree. Sell in May and walk away. But because we have the overlapping nature of the candlesticks, the very essence of the chart here is telling us that we're in a short-term correction, not a long-term correction, then we need to be very aware that this is going to be lasting only really a short period more before we actually start to see that move to the upside. So not only are we still above our 200-day exponential moving average, indicating that the market is still bullish for Bitcoin, we have an overlapping nature of candlesticks showing us that liquidity is being extracted, but we're no trend to the downside. If we take a look at it from an Elliott wave theory point of view, we know that we're talking about a three-wave pattern, a three-wave corrective pattern coming in towards our $53,000 to $56,000. If we throw on smart money concepts, we can also see that there's no change of characterization from the previous bullish market it found itself in. So ultimately, it doesn't look like there's any reason outside of lower highs and lower lows to really be concerned with. And I do think we're likely to see a big reversal in the market and a lot of people who are potentially shorting the market getting stopped out of those positions. Our stochastic RSIs are in an oversold area on the weekly, oversold area on the daily, oversold area on the 8-hourly charts as well. So expect some short-term volatility on the 1 and 4 hour timeframes, and we're yet to see the daily bottom out just yet, but things are starting to heat up. Things are starting to see momentum easing off, and we are likely to see a reversal in the market. And so whether you are a believer in sell in May and walk away, or whether you think actually there's a lot more room to the upside to this one, I think the data is quite clear. It does look to me like we are likely to see an end to this short-term correction in the coming weeks, and we are going to see a very significant run to the upside. Now, what can change my opinion? Changing my opinion would happen if we get a closed daily candle lower than the 200-day EMA. Closing below that 200 EMA is going to be a bearish tail. A retest would have to be confirmation of that. So if we break lower than the 200 EMA, we test the EMA again and we get rejected from it, then that is going to be the time to go short on BTC, in my humble opinion. But again, who am I? I'm just a guy on the internet talking to a camera, and I'm no financial advisor. I cannot give you financial advice. All I can do is share my thoughts and opinions on the data in the charts as I personally see it. And guys, if you haven't already checked it out, you should probably check out this video right here where I'm discussing what's going on with VeChain's VET token.